questions and come, and if you can figure out the answer, then it will be very easy. In addition, I will add one more question as the discussion goes on. So what will happen during the next 2 hours? Of course, you will have a very good revision of the syllabus as well as more salient point of this pre-scene. So the idea is not to predict what is going to come, but obviously if examiner wants to relate some of this information, right? So we are, from that sense, we are analyzing each and every critical paragraph from the lens of ABR, right, especially from the area that I am covering. So this is your case study. As the picture shows, you can see while they are into freight forwarding and logistic gradually. So initially they just started with freight forwarding, and subsequently they acquired their own fleet, and then the warehousing, the business was expanded, and then also they were into non-vessel operating common carrier, that business, and investment subsequently, all of that. So that entire story in one slide, right, I will cover. Sorry, before going to straight away to the case study, one thing I want to tell you very confidently. How confident? Right, say above 100. Why? Because I have been lecturing for last how many years? I mean 15 plus, close to 20 years. There had been many successful students, several prize winners, right? I don't come and do live lectures every day, but when I do a lecture, at the end you will see the power of it. It's not an exaggeration, you can judge at the end. So therefore, this session, if you watch from now to the end, you will really energize yourself and do a self-test as to where you are in, and possibly still you have time to strategically approach this paper. So how do you know whether you are able to pass the exam? Especially when it comes to ABR, you need to spend fair amount of time to do your accounting standards, the consolidation, all of that. But if you do only that part and get say 50 or less, you are, by doing all the accounting standard calculations, you are going to get, maybe still you are not scoring above 50, you are ignoring some areas where you can easily score, and that is this part of the paper. And if you are properly prepared, it is absolutely easy. Look at the past papers, how easy they are, right? So therefore, you can be the prize winner simply. So get the maximum from this, get the maximum from the accounting part, financial reporting part, the prize winner, right? Don't aim to get a 50, the chances that you will get below 50 is high. But aim the sky. You will not be the prize winner, but you will definitely pass. But those students who are ambitious, maybe one student can be the prize winner. So therefore, if you want to be the prize winner, this segment is very, very important, because while you are scoring from numbers, this section actually helps you to score very easily, especially corporate governance. And now probably we could expect some question from IFRS sustainability, right? And then obviously it can be internal controls or risk of misstatement or definite question from ethics that comes every year. If you look at all the past papers, ethics question is absolutely easy. Similar questions every time being tested. So for a serious student, if you want to be, definitely I want to be a chartered accountant, so that's, be serious by 2025, right? Definite target is to be a chartered accountant, then you have to pass this paper at once, right? Not just to get a 50 marks, but remember, when you go to the market, the knowledge behind this paper is absolutely valuable for you to become an accountant who is thinking beyond numbers, about the governance processes, internal controls, about the non-financial reporting. It's a very rich paper. So therefore, learning this properly will definitely help you beyond the exam as well. So having said all of that, now let's start. So what is the test you need to do to see whether you are ready to pass the exam? Is very, very simple. Think like examiner. How do you think like examiner? If I am the examiner setting this paper, so obviously I have to look at first what? LOs. Because every question that I am going to test has to be connected to a learning outcome. So then every learning outcome, if you really see, there is a knowledge behind the learning outcome. Without reading that, you will never be able to comprehend, or in your answer, that you have that knowledge. So therefore, and also logical student will know this exam, this, because now remember, this is going to be maybe last paper before a syllabus revision, right? In that context, there are certain things which are not tested. Those also can be tested, because usually before the end of the syllabus, all the areas to be tested. So if you want to pass the exam, the LOs, now the test you need to do, read. Don't read that 1000-page study pack. Don't read accounting standards, again 1000 pages. Not the corporate governance code, not the sustainability standards, not the study text supplementary guide which is allowed to be taken to the exam hall, but those 5 pages that exactly tell you that this is what you need to do regarding board of directors, right? Evaluate the functions of the board in terms of their performance and conformance role. What does it mean? It is a learning outcome. Evaluate the effectiveness of the board. What is the knowledge? What does it mean? What are the areas that I need to focus? Now, if you know that, I mean, you are ready, and then obviously need to do some answers. So these are the 3 things. The LO, you need to know what is behind the LO, that particular knowledge. In that 1000 pages, if you really do a very succinct summary, maybe 5 pages, right, or 10 pages. That's the essence. Maybe short notes. Then you know your brain application confidently, right? With confidence, you are writing, applying the theory based on the case study. So the 14 question that is given to you, I'm sure you have those questions, right? So I have given these questions already from the pre-scene, these questions, right? See, these questions, corporate governance, from your pre-scene, right? How you evaluate the effectiveness of the board, right? And then talking about the board performance and conformance role, about the board committees, especially certain failures, and then several questions on sustainability standards, right? And audit committees. All of these questions I have given to you, right? So that's what we need to really cover, rather than just reading the pre-scene, because you have read pre-scene. Anybody can read it, right? So what is important is how do you interpret this in the context of the syllabus learning outcome, and also use that an opportunity to do a full syllabus revision. Although what is in the pre-scene may not come, what you study will definitely come, because what you are studying is what is there for the syllabus, right? So with that note, what I meant is, I said 2 things. One is LO, and second one is knowledge behind the LO. Let me show that, because normally in every lecture I remind this, because however much we remind, students forget this. See this one. If examiner wants to test this in your paper, this is not so far properly tested in past exam. Functions of the board, right? Now logically, when you say functions of the board, this has to come to your mind, right? Future functions and current functions, right? So specifically looking at the future, the board is working on the strategy, right? And then when it comes to internally, future and internal, inward, the board is actually approving company's policy, right? And this part, strategy and policy. Then when it comes to the monitoring, so one of the primary role of the board is again monitoring the management and then being accountable. Now you see these 4 you can really apply to the case study, strategy formulation role of the board, policy making, right? And monitoring part, monitoring the management, the supervision is monitoring, and then accountability. Now you should be able to explain this in a case study practically. If we apply this to your case study, what do you think this great company, don't you think that in terms of strategy formulation they have done a lot of work, right? The way they started the business, gradually They wanted to grow by acquiring, investing, right? So they have, I mean, we can't say they don't have a proper strategic framework, but somewhere they have failed. Where? Is it because the management failed? The board did not do this monitoring part properly? Why I say that? The examiner specifically say in the case study that there are failures in risk management, compliance, there are cybersecurity issues, the accounts are out, meaning that there are inaccuracies in the accounts. Those are areas where board is supposed to monitor, and also accountability, right? The board is answerable. The accountability finally comes in financial statements. Now this way you need to be able to apply corporate governance. Corporate governance කියන්නේ අර code එක කියවන එක නෙවෙයි. But however, there are some exam questions very easy. You know, directly tested from, you know, traditional corporate governance question is comment on the board composition, X number of non-executives. Anybody can answer those questions, right? I'm sure if those questions comes, you will also be happy. But little advanced question at advanced business reporting paper, things like this, right? Then effectiveness of the, now what I meant is, first you need to know, okay, what is this functions, and those function also we can connect to two, performance role and conformance role. Usually this is performance, this part, and this part is conformance, because the company has to work within the defined policy framework, right? And then they need to prepare the financial statements, be accountable, all of that. And so basically, once you know the learning outcome, you should be able to explain individually what this means, what the board strategy formulation, right? So that is something about the future, looking outward, right? That is future and outward. So sorry, this one is looking at the future and outward, right? And then likewise, what is supervision, what is accountability? Take another one, what is board effectiveness? So for example, have you looked at 6 C's of the board? At least have you read it? And this is very theoretical. Remember, examiner can still test this. If examiner asks you, giving 5 marks, some story and explain, discuss the concept of governance from societal perspective, what is your answer? So that's where you need to really go through this. So this is about definition of corporate governance, right? So operational purpose, operationally it can be defined, relationship wise. So what are the relationship? For example, corporate governance is the relationship between several parties, right? The board, shareholders, management and stakeholders. This is how you explain corporate governance as relationship. Operational definition is the general, operationally it's defined as a system by which companies are directed and controlled, right? So likewise, anything you take, see whether you are able to explain that point. So what are the models of corporate governance that is applicable? So these are theoretical questions, right? But all the past papers in the past, sometimes few of these have been tested, but usually famous area for the exam is board of directors. And why I am showing this to you, to emphasize before the exam, right? Make sure, even this pre-sim, that's why I am going to ask most of this question in relation to your case study. Now you see, how do you evaluate the company's board in your case study in ensuring the integrity of financial reporting? This is totally, board has failed, because your case study says financial statements had a lot of inaccuracies. So then why that failure has happened? What are your recommendations to improve? The case study says there is an audit committee. The audit committee has independent members. Then why there are problems in financial statement? How the audit committee has failed? Those are the things that you need to ask, right? So then when it comes to the, now see this one, even this one of the paper examiner, I think maybe one before previous. The students who understood this LO, interaction between external audit and audit committee. But that interaction, what does it mean? It means, can there be an emphasis on matter? Can there be another matter? Can there be CAM? Right? How those communication is going to take place. That is what is in this side, this specific knowledge. You can see these points, right? CAM, emphasis of matter, going concern. So understand very well this LO. Your final test is to ensure that whatever LOs you can apply and write an answer. So that is what matters. Then non-financial reporting. Even in the last paper there is a theoretical question. Now examiner can, but don't get scared, right? Your exam is really good. Why I say that? While there are new topics, whenever there is a new topics, what is tested in the exam is basic questions. Now IFRS sustainability, they won't ask very complicated question, I am sure, but basic questions. Why? It is very new, first time tested. But if there is some question which you can easily answer, why not get that marks? So that's why I am explaining to you. There is a comment saying screen not clear. Are you? What do you mean? Are you the screen? Can I get a feedback? Is this clear? Is there a problem with the screen? You can see, right? Yeah, thanks. So, so I didn't start it, but my very good start is what? How do you see whether you are ready for the exam? Remember, this is not only for this subject, any subject, final test. Then how do you know that you will win the test? Do a past paper by yourself, taking 3 hours. Have you done it? Only serious students do that. And those students who do that will definitely pass. Because there are some students, they are very lazy. They read past papers, read answers and sleep. So they don't seriously work, right? Maybe they can pass still, but the probability of failure is very high. So remember, do at least 1 or 2 papers. Don't get lecturers to write answers. It is you who should write, and lecturer's job is to facilitate your learning. Otherwise, if he spoon feed you, if there is a very novel question you need to really apply, you get stuck, right? So another thing, remember, this is open book. Open book can itself be very dangerous. How can you read all of these books during the exam? So instead, what you should do before the exam, based on this LO, identify this particular. Now when I explain to you board function, this is in study text one paragraph only and one diagram, but it is LO, very specific. That page you have to read and understand, right? When I say previously, interaction between audit committee and external audit, again one section. Very specifically, do you know what does it mean? Then only you can answer that question. So that's the advice I want to give you, and this is IFRS S1 and S2. SLFRS books are released, again open book, you can take the books, but you can expect basic questions, right? So I have given you several questions from basic to advanced. You will learn today whether it is tested or not. That knowledge will be absolutely powerful, and if it is tested, get the full marks. So these are the learning outcomes, new LOs for S1 paper, the SL1 paper. Specifically from corporate governance perspective, we say ESG, the G in ESG, the governance. IFRS S1 has a topic called governance. So that is where it connects to corporate governance. And also when it comes to the corporate governance code, this one, right? That also talks about ESG, sustainability, and there are other standards. So it can be tested from a corporate governance and both financial reporting perspective. If you read this LO, it says evaluate the oversight role. Oversight means supervisory role of the board and management in monitoring SRRO, right? So what board has to do And remember again, they connect it to listing rule and corporate governance as well. Now that means this corporate governance code also talks about ESG. IFRS S1 also talks about it. Listing rule says that company should have a ESG policy, things like that. But how do you reconcile? I have given you one question in today's paper. How do you reconcile the corporate governance requirements, especially inside out and outside in perspective? So I'll cover that, don't worry, you will learn that. So this one, and then there are multiple framework. No, now most of the Sri Lankan companies has GRI framework, and most of the Sri Lankan companies use integrated reporting. On top of that, IFRS has come, and IFRS standard refers to SASB standard. So what is this alphabet soup, right? So some understanding you need to have. And especially when you apply the core content of the standard, these 4 topics are very relevant in S1 paper. Anyway, we talk about governance, right, strategy, risk management, and target and metrics. So I will cover this at a later part of my session, and then understanding what climate, the essence of IFRS S2 standard is about, only about climate risk. So I did a special lecture end to end. You can see how interesting it is. It is freely available, I suppose. You will learn everything that you are supposed to know if you are not thorough with IFRS S1 and S2. Climate risk, very, very relevant topics, right? Future topics, highly demanding. Most companies are looking to recruit people with this knowledge now. Those who know about carbon accounting, right? Applying greenhouse gas protocol, scope 1, 2, 3, and so on. So this knowledge also we are touching as a part of this lecture. And then especially the concept like somewhere it should be there, the word proportionality. I think it is in the previous slide. It is there as a basic one for the CL2 paper as well, proportionality principle, and then transitional relief given to this. And as you know, from 2025, next year onward, this is mandatory for top 100 company. So the question I have given to you is to assume that your case study is top 100 and you are going to prepare for mandatory IFRS adoption. Now come to your case study. As I told you, I am not wasting your time by reading paragraph. How many times you have read, and all the lecturers also do it, no? So then what is the point of memorizing the case study? But instead, please take the case study to your hand. I am sure all of you have it. I am showing highlighted paragraph and asking you a question, what does it mean to you? How can it be converted to a question? If a question comes, how that paragraph can be interpreted and relevant parts can be reproduced with your own thoughts, right? That's what matters. That's the exercise we are doing now, and that's how you build your confidence. Please get the case study and a blank piece of paper and do it with me. I'm going to show you. Before that, I'm giving you in one slide a very good summary, right? How they started, because from governance perspective, it's easy for me to explain in this way. Initially, there is a chairman. Usually in corporate governance, chairman's role should be independent. And corporate governance code says if the chairman is not independent, majority of the board should be non-executive. Do you know that? In this case, chairman, can you say independent? No, chairman does involve in the business. We can't say chairman is independent. However, they have split the role of chairman and managing director. That's very good. That's his friend, right? Roshan, Gigi, and Kamal, managing director. That split is good, but still chairman is not independent, right? Because he does involve in business activities. And then wife Sanjana also joined as a non-executive director subsequently. And from a board perspective, after some years when the business was expanding to warehouse and transportation, right, Udaya Sirisena, a qualified accountant, was appointed as a finance director. That's good, again executive director. And then the most important thing, this is where examiner can ask you a question about the board, maybe board effectiveness. because in your syllabus you need to know about non-executive directors. I am testing your knowledge now. Can you tell me 4 things about non-executive directors? Why we are bringing non-executives to this type of a family business? They are bringing 4 people, 3 people, right? Yeah, 3. Why they are bringing them? And they are independent non-executive directors. Why? What are the 4 reasons? We should quickly know, right? That's brilliant students, right? The 4 reasons why non-executive directors: strategy role, scrutiny role, risk role, and people role. This is why we need non-executive directors. So, in terms of strategy formulation, you need that expertise outside in. So, 2 logistics experts are joining the business. Probably they are, main business model revolves around the logistics and transportation. And then, especially when you have people from finance background, the thing like those who lead audit committee, and they will, even these directors can scrutinize. Scrutiny role means the checking the executive role, whether things are going on the right direction. And non-executive also have a big role to play when it comes to managing risk, and especially when it comes to attracting talents, improving, retaining the people role, and especially remuneration. See, again, if you relate this to committees, this people role is largely about remuneration committee, risk role can be risk committee, right? And then scrutiny role can be audit committee, and strategy is entire board. Board is responsible for entrepreneurial leadership within effective system of risk management and control. That's the first paragraph when it comes to board in your corporate governance code. So if you are asked to talk about the board effectiveness, you will talk about the board strategy role, right? So these 4 roles, right, because I previously explained to you board roles, if you remember. Now what I want to say, these Tenika, Nimalka and Sali again bring in probably strategic perspective from marketing. What we can see is very good observation to make. What do you think about board diversity? That's another topic examiner can ask. I haven't asked this question from you. Can you write additional question? Evaluate the board diversity. Remember corporate governance, if you look at the last exam paper, the last one, latest paper, normally traditional question you are finding weaknesses, right? In the last paper, examiner wants you to comment positive things about the governance. What is given in the case study is positive. That also you can comment, because evaluation may be positive or negative. That's the evaluation. Your judgment in applying the principle. So, board diversity, again, why board diversity? Can you tell me 4 reasons? What? 1, 2, 3, 4. Very similar to those strategy scrutiny people. When you have diverse board, you can bring outside expertise, right? And you can specifically address the risk of what? Risk of what? When there are like-minded people, you can break the group think. And when the board is diverse, another important benefit is what? Because you are having board members that represent different segments of the stakeholders. You have the people orientation, finance orientation, marketing, right? ESG, environmental, so that add to the company's reputation, right? Likewise, you should know. Another topic in your syllabus is gender diversity. So then why there are 2 ladies on the board? Can you comment? Why women on the board? Why they are important? Due to several reasons, right? For example, women are considered to be more qualified, they have the expertise, the trend, right? And then especially they are more conscientious, prepare well before the board meetings, and then when it comes to ethical matters, they are good and they understand the market. Who says these are done in studies? If examiner asks you to comment, you should know about it. These are there in the books. Right, this is corporate governance. Corporate governance කියන්නේ මේ පොත මතක තියාගෙන ඉන්න එක නෙවෙයි. So you should be able to comment, evaluate, criticize. All right? Then, so remember, this is very good. Now you can understand the board. We can talk about the board balance, traditional corporate governance question. How many executive board balance, all of that we can comment now itself. Now we can see IPO, right? When it comes to the IPO, somewhere in 2019 or 18, right? They are bringing, especially at this point, they acquire their own fleet and then modernize their warehouses. Another investor joining, and actually he is a very good addition to the board. Do you know why? Ajanta, right, 8%. So he is not independent director, he is going to be executive director. So why he is important? Because he holds several private directorship in several other companies, right? So this is very important. This is like a relationship capital of the board. If you have board members who are members of other board, it's really good from a strategy, again the strategy perspective. So now if you look at the board, you can see with Ajanta, right, how many board members? 1, 2, 3, 4, 5, 6, 7, right? So, and then 8 board members, 21, they are investing in OSL, non-vessel operating common career, and if you look at their accounts, and case study also says they are not making profit. From a risk of misstatement perspective, in the balance sheet there is equity investment. Are you saying it is going to be impaired? That can be a risk that you can write in the answer if examiner wants you to comment on what? Risk of misstatement, inherent risk may be high. So you see, I am talking different words. All this is critical. I mean, this is the language that we should speak when it comes to this segment of ABR, right? Risk of misstatement, inherent risk, control risk, and so on, but it's not auditing, right? From a risk perspective, that's why there is nowhere auditing standards are now referred to. So you have to look at this from a business perspective, this paper, right? Now, this is a good summary, as you know, from page number 2 to 4. Now I want you to apply some of the things that we know about the syllabus, what you have learned, to the case study facts. I asked you to get the case study with you. I am not reading, but I am highlighting some information that matters. Why it matters? Because that information can be interpreted, can be used when you write your answers, right? If that type of a question comes. What type of question? Now, this is page 5, and I have highlighted something in page 5 which talks about having fostered culture, quick decision, department heads are empowered to make decisions, and there is a lot of agility. However, there are SOPs also to prevent errors. So there is a lot of flexibility is given. And also I am highlighting some information here. Company promotes autonomy. Again, now see these words: agility, autonomy, independence, right? So there is a lot of freedom. They can make quick decision, autonomy, and recognizes individual contribution. Individual people contribution matters. What does it mean? This approach not only leads to high level of motivation and expert performance, see the word performance, and also reflected in company's evaluation process for annual promotion and increments and bonus. For me, this paragraph is critical. Why? What does it mean? Please write. You can now talk, interact. Why this matters? Did you notice this matters to you? This type of information can be used if certain questions are tested, especially from risk of misstatement area. Why? Especially this last part. What does it mean? One is some part of this information to say that their roles are defined, SOPs are established, indicate good things about control environment. Remember, control environment is a famous topic. If now in some past papers, control environment tested for 10 marks maybe, then you have a page in auditing standard, you can just open, just apply that, right? Or study text. But here, this last paragraph is critical. What is FRF? Can anybody say FRF? Remember, FRF is a part of risk of material misstatement, right? What is FRF? Fraud risk factors: incentive, pressure, opportunity, attitude, or rationalization. You have to have a good practical understanding about it. So, this incentivization or pressure can increase the risk of fraud, right? And this case study talks about, some irregularities, problems like that. Especially, how you interpret this paragraph is like this. One, like said, the fact that they have SOPs indicates sound control. Now, this last paragraph, this information about the determination of the fact that they have the autonomy, freedom, agility, which is going to be the individual performance bonus, that is indicative of a target-driven culture, and that incentive pressure, especially in the current, look at any freight company in Sri Lanka, the last financial year there is a loss, and in your company, your case study also. Why? Because the Red Sea is geopolitical issues, the freight, the business, the global merchandise, overall business has shrunk, right? So, this is the part of the pressure, you want to achieve incentive, and the external environment is not good, not conducive. So, that is a fraud risk factor. The other one is when there is a lot of freedom given to people, there is a chance. This is a very, very important concept. Remember, management override of control, right? So, by definition, there is always, if you look at from an auditing perspective or a risk perspective, that every company, there is a rebuttable presumption that these type of frauds are there in revenue recognition, as well as management override of control is usually present in many companies, in any company, and this information adds to this. So, that is how you need to really, if you are a brilliant student, if a question comes, you are connecting this information and developing your answers, right? Then I am coming to page number 6 and highlighted few things, and after that I am coming to several questions that I have given to you to see how those questions can be answered, right? So, in page 6, why I am highlighting this information, especially here, it talks about, following from the previous page, again there are policies, structures, right? However, this can be changed, you can do some adjustments, right? You can streamline approval process, all of that, because they are more agile. This is what I previously also commented about, the possibility of management override of control. And this part is very lot of emphasis in this case study on the AI, right? And blockchain technology being used, and various IoT for demand prediction, things like that, right? Blockchain. So, this is same. So, a lot of focus on technology, which has led to increase in customer satisfaction. So, what does it mean to you? What does it mean to you? What is the risk? Very, very relevant. if they ask you a question, please write this question, because this question I didn't give you in my paper. I gave you how many questions? I think 12 questions. This is the 13th question. Please write. Evaluate the oversight role of the board when it comes to cybersecurity risk management. What are you going to write for 5 marks? What is the role of the board when it comes to cybersecurity? How board is going to ensure that there is a cyber risk management process which is activated through relevant risk management and internal control practices, not only firewall. Now firewall is outdated. There are new technologies, right, like SASE. So we will talk about it, and your case study specifically talks about cyber risk. And those cyber risks is going to come as liabilities, penalties, and that's given in the case study. That is one area you can specifically talk about cyber risk, right? Why cyber risk is high? Because the business model is such that your business model increasingly exposed to the external environment through various third-party applications, through various other internal applications, because you use a lot of these IoTs. That is why cyber risk is high. So how do you comment on cyber security control measures? And this corporate governance code specifically talks about cyber security risk management. And the answer is there. You need to align that answer if that is tested, right? That's how you need to apply. Then another page, page number 7. Now this page is critical. වැදගත්ම පිටුවක්, because if you looking from the lens of corporate governance and risk of misstatement, because specifically they say corporate governance here. While they say that lot of emphasis on the drop in revenue, 22% decrease, operating profit. Now you don't need to waste your time by calculating everything given to you, right? Profit, operating profit, net profit, all down, right? So this is serious concerns about the short-term financial health as well as strategic direction. Now if you are supposed to talk about the board functions, remember I said 4 functions. See, there is a question about strategic direction as well. Are they on the right direction for the future, right? That's the board role. Then this is the most, I would say, if somebody asks what is the most important paragraph in this case study, is this from this risk of misstatement, governance, audit committee, all of that. Very fundamental issue is given. What is the issue with SOP, everything they have? That's why I said management override of control is prevalent in this case study. Otherwise this will not happen. Whatever SOP you have, they say discrepancies, right? And that relates to both earning and expenses. And that eroded not shareholder but stakeholder, maybe the bank loans, the bankers, right? And that questions, the key word here is oversight. Now who is responsible? I have given you several questions on this. Because the case study says they have audit committee. How audit committee has failed then? What need to be changed? Those are the questions you need to think beyond what is given in the paper, right? Be creative. And then here positive, I told you, like last exam paper, latest paper, if you look at, examiner wanted something past paper. Positively talk about corporate. Now this is very positive about the board, and actually there's a good board of directors, no? See the composition, structure of the present board of directors, ensure we spoke about board diversity. There is a good skill mix. There are logistic experts, marketing experts, finance, all are there, right? And investors. So there is a good mix, and there are 3 independent non-executive directors are there. So then board oversees the strategic direction, strategy role, the performance role, while implementing effective risk management. That we have a doubt though, right? Because somewhere in the case study they say they have not done well in risk management, regulatory compliance. Specifically they say, I'll show you that paragraph. Now this is the monitoring role of the board. Remember I told you 4 roles of the board, right? And evaluate performance of the senior management, that is also part of monitoring. And then audit committee has independent non-executive directors with expertise, and they oversee internal. Now I don't know how they oversee. Were they sleeping when the accounts had all these inaccuracies? We have a serious question about audit committee. The company has developed comprehensive code of conduct also there, so ethical matters. And then they are very transparent. And this last part is where examiner talks about ESG. Not only that, there are several other places I'll show you in another next page how ESG comes to the picture. Now, how this information is relevant to you, I want to tell you one thing. This decline given in your case study is common to the actual industry in Sri Lanka. So I have taken, this is from Aitken Spence. And if you look at, there are several other companies, for say Haley's, Expo Lanka, so all of these companies. Now see here, freight rates decrease is 60 to 70. The global trade drop is 1.2. And remember, this Red Sea issue is a famous, you can Google now, this is coming from those geopolitical tensions, fight, war. So that disrupted the logistic business, right? I mean, even shipments, and most companies who are in the export business struggle because the Red Sea issue, right? And they talk about all of this, and this drop is partly coming from a business risk, remember. Now in your syllabus there is a yellow, whatever I say I am connected to syllabus learning outcome, because the examiner start with that. In syllabus there is a yellow, how business risk can connect to risk of misstatement, including fraud risk. That is where I connected previously the fact that they are a very target driven management, and that when the external environment is not doing well, there is a high risk of fraud, including management override of control, which will overstate revenue and understate expenses, and that has happened in this case study as well. That is why accounts are inaccurate, right? That's given. You see how you connect this information and beautifully produce an answer if examiner asks about what? Risk of misstatement. Another reason why you can say revenue recognition is a high risk, because if you apply SLFRS 15 to logistic company, you know there are multiple performance obligations, the variable component in the revenue, right? So then there is a complexity, and complexity increases the inherent risk. Now I talk about risk of misstatement now during last 5 minutes. This is very, very important if examiner test, because the last 2 papers examiner has not tested. The last paper also control environment, I guess. Yeah. So this is now chance, I mean time to test again risk of misstatement, especially after syllabus change. There was a slight change to syllabus about 1 or 2 years ago to bring this business risk perspective more than the audit perspective. After that, not tested properly, right? So look at from a business lens, that how accounts are going to be impacted, right? So, so this is a very important page, and especially business risk is this, Red Sea to all of that. So this slide has the information, and that's in pair. Now which yellow examiner can link this information, right? How to enhance oversight. Now I picked the oversight word here because the oversight role has failed. How to enhance the oversight on financial reporting, and this last paragraph ESG. So I will go to at the end to the questions that I want to discuss with you, how to answer those questions. Now the extremely important, if somebody asks what is the second most important paragraph in the case study, this is this, from this perspective of corporate governance and risk perspective. Why this para is so important? Because it says the company's controls are not working. I mean, there are deficiencies. Internal control mechanism have shown notable weaknesses, particularly in risk management, fraud prevention, regulatory compliance, right? A key issue was the insufficient SOD, segregation of duties, right? And additionally, a recent data breach, see the sensitive data leaked, attributed to inadequate cybersecurity. I already discussed with you cybersecurity measures, compromise sensitive customer information. Remember, now see if this company has European customer, their data leak in GDPR, right? Global Data Protection Requirement Act. And in Sri Lanka also there is act now that is personal information. Now GDPR is a very tough act. How do you protect sensitive information of customer? So percentage of turnover is the penalty, right? These deficiencies not only pose serious legal and financial risk, but also undermine investor trust, right? Reputational risk, reputational and financial risk. So this is definitely, you can connect to risk of misstatement, fraud risk, and also internal controls. Several questions examiner can use this paragraph and ask. Another specific area that can be tested is cybersecurity risk management, right? So I will ask this question: what are your recommendation to improve internal control deficiency? Now then, if there is a question like this, what are you going to write? Can somebody tell me? So what are you going to write? How to improve in now, given these deficiencies, what are your few recommendations that you want to give? Yeah, yes, good recommendation. Now they are silent about internal audit function, right? Yeah, what else? You also need to seriously look at, start with the audit committee charter. What are they actually doing? Are they doing something relating to financial statements or something else? Start with the audit committee charter, because the audit committee usually has the mandate on internal control. That's the dedicated committee to oversee financial reporting, risk management and internal controls. Thirdly, independence of both internal and external auditors, right? And remember, listing rules have been updated with additional responsibility of audit committee. Listing rule has changed recently. Now, when you recommend, what are some of the bigger recommendations that you can make, right? Yes, those points we discussed. Now I am bringing a very powerful recommendation. Now look at how internal, now this is a new LO added to your syllabus 2 years ago. I said there was a syllabus revision recently. There is a new LO to talk about how internal control, how clear internal control roles and responsibilities. For that, there is a very powerful model. So the company can revisit how internal control responsibilities have been structured from the board to the first line, to the second line, and to the third line. So that's the 3-line model, right? Start with the governing body, and that is usually the audit committee. That's why I said look at the audit committee mandate, audit committee charter, to what level they are currently overseeing internal controls, And then when it comes to management, there is a first line. I know you can't read this properly. Remember, this is there in your supplementary guide also in studies with the syllabus revision, I mean the change. First line. First line means those who are in a freight company, the manager, front manager doing the, booking or handling transport, or call center manager. You see these freight companies, transport, they have call center and all of that. Now that front line manager is a manager, he is managing risk. But there is second line, maybe the finance person, maybe a compliance person checking whether they are following the SOPs. It's not internal audit, but a management checker or a risk manager ensuring that certain SOPs or parameters have been followed, second line, right? For example, let us say the first line in this freight company, now they have warehouse operation. The warehouse manager is responsible to ensure the security of the goods, say theft of goods. Now look at the risk of this company. They are managing others items in their warehouse. Now if there is a theft, they are responsible. The first line responsibility is the warehouse. But the second line, there is additional supervision by another compliance officer. That is where the counts are taken, periodic verification, that's the second line. The third line, the difference is, third line directly reports to the board. You see they are independent, that's the internal audit. So internal auditor's role also very important. Rather than just talking directly internal audit, ask this question, how internal control responsibilities have been, whether it is properly defined across three lines. Right, that's very important. The other thing is for you to really apply the COSO 17 principles, right? So what are the areas you have problem in this case study? Specifically, if you look at this, the things like fraud, see unauthorized transaction, right? Conflict of interest. Now, when it comes to the risk assessment, have they properly identified risk? Specifically, have they identified fraud risk? You can see somewhere the fraud risk is directly there. Potential for fraud risk, how they have done a fraud risk assessment based on these three factors: incentive, pressure, opportunity, rationalization and attitude. Right? So this part probably they need to improve, right? Whether they have properly assessed the risk. And then obviously control activities they have failed. Why? Do you know what control activities means? Control activities means segregation of duties, authorization, right? And various monitoring mechanisms, not independent monitoring. So these are usually. Another area where they have failed is IT control, specifically in relation to cybersecurity, right? And then in addition, we don't know in this case study, this monitoring part is usually about internal audit, how frequently internal controls are evaluated, whether it is deficiencies are reported and corrective actions are taken, we don't know, right? That you can definitely write. So one student says, appoint chief risk officer and compliance officer can take this recommendation. Now that's where I told you, rather than specifically pointing a person, refer to a structure. Now in this structure, where is the risk manager? Risk manager can be here. Internal auditor can be here. The most important thing is the independent channel. Imagine if internal auditor reports to CFO, there is no point. There are many companies, it happens, right? But this is the best way it should happen. Yes, risk manager is important. And it's a good question that you ask in this corporate governance code. It talks about who should do risk management. Now, either audit committee or risk committee or entire board. So, new code of conduct specifically talks about risk management. And you, so therefore have little bit of understanding. It's very simple. So simply Do they have a proper process of risk assessment right now, formal process? When business objectives are set, are they identifying both internal and external risks that can affect their objectives and strategies? In terms of strategic risk, finance, if you apply COSO ERM framework, right, the COSO ERM cube, you have, right, strategic risk, right, is more about overall strategic risk and financial reporting, compliance, operations, right. So those risk universe, so do they have a process where the risks are identified, monitored, mitigated, and remember who is responsible for what word? Who is responsible to define the acceptable risk? The board of directors are responsible to identify what? Principal risks. Not to identify, to establish principal risks they are willing to take. That's called risk appetite. If you go to risk management, I can tell you para reference. So go through, now you open, go to the risk management section, right? Because again, these are new things, right? When I say new, there is lot of addition to risk management section, and even the listing rule now talks about risk committee. First time, usually risk committees were discussed only for banks, right? Now that has come to other companies, but it's not as a law. So if you go to the risk management section, so what does it say? Well, I said the first thing is board is responsible for the risk appetite. The principal risk board is willing to take, right? So where it is under the board of directors, and especially you can go through, there are the guideline, the framework for risk management, risk policy, everything is updated in the new corporate governance code. So what I said is page 27, board should establish a policy for determining nature and extent of principal risks. You can highlight the word willing to take. So it starts with the board defining the principal risk board is willing to take, and that is called risk appetite. So against the risk appetite, there has to be a risk identification process, and then measuring the risk, high risk, low risk, and so on, and then mitigating and reporting, right? That's how it works, right? So moving on. Now this is, I need your answers now. What is the answer you're going to write? Because your case study has cyber risk, data breach, and that's going to result in penalties. What are your recommendations? Tell me quickly. 4 points, 5 marks, right? What are the answers? Here are the answers. 1, board should have a process to identify. Go to page number 42 of your corporate governance code, but practically you should be able to explain. It's not a matter of copying and pasting. I'm also going to give you some practical input here, right? Process to identify how. Now look at, in your company's business model inherently exposed to cyber risk because there is extensive use of IoT and connectivity with multiple systems and multiple parties. So see the business model, how, to what level they are vulnerable when it comes to cyber risk, right? The board should have a process to identify how the business model, IT devices within and outside the organization can connect to the network and send and receive. So the business, the case study, your case study, the inherent cyber risk, if you do inherent, you see in risk management we have IR, right? So you have inherent risk and then you have a residual risk. So if you do a risk map, what is this? This is not economics, right? This is if you put impact and likelihood of risk, now you will understand. Say this is your risk appetite, right? If there is some inherent risk of cyber risk here, because your business cyber risk is very high impact and likelihood, bring it here through cyber security risk management. Cyber security risk management. What is cyber security risk management? It begins with a policy, framework, person, chief information security officer, and then control measures and auditing. Control measures can vary from SASE to firewall to phishing simulation to incident reporting, all of that, right? So, look at, first of all, now what it says, the board should have a process to identify. What board should identify? How organization, කොහොමද cyber security වලට exposed වෙන්නේ, right? How cyber security affecting the business. Now, generally, I am giving you this. This is how cyber security usually comes. End user compromise. So, you are an end user, right? How end user compromise comes? Phishing attacks. Nowadays, lot of mails come. CEO has sent you a mail, this, you know, to a CFO, transfer funds somewhere, but it's not the CEO, right? So, there is a, if you really look at, there is a dot, you know, that's phishing attacks, malicious USB, malicious software. There are various ways, if you are an end user, how you can be compromised, right? So, what will happen is, if there is a compromise in any of this, your endpoint security, and that pivot to company's data center, right? Or sometimes internal employee purposely can leak company's data. So, that's where data protection is very, very important today's context. Then, this is company's end user exposing. Now, in this case, this is all possible because they are very much connected with AI and various other IoT. Externally exposed services, that is where you have your intranet, supplier portal, your various systems that expose to the internet, and then third parties, right? There are multiple parties joining your company's network, and then they can compromise. So, physically can somebody come and, you know, attack your data center. And this is something very important, latest development, right? Traditionally, we spoke about firewall. SaaS is a very powerful secure access service edge, because the, you know, through a firewall, we are trying to physically control one location, this data center, there is a firewall. But if you take SASE, the entire network kind of perimeter, you are in multiple locations, all of that. See, SASE facilitates centralized policy management and visibility across entire network, while firewalls traditionally gives visibility at a point. Now, this is one answer. What board should identify cyber risk? Number one. Then number two, this number one we already did. So, number one, what is number two? The board should appoint CISO. Why CISO? Because he has to implement, he or she, cyber security policy. Is there a policy in your company, right? And then that policy should talk about process. How do you manage cyber risk? If an incident, now suddenly, you know, some incidents, phishing attacked. So, how that attack getting reported, incidents response, system is down, how are you going to recover, right? And vendor management system, DRP, disaster recovery plan, governance structure, right? How is your, you know, which committee is going to look at the cyber security risk, right? And cyber insurance, see, I mean, this corporate governance code is very good. It has lot of, I mean, you can easily bring this to your answer if this is tested. Then board should allocate time to debate at the board meeting any cyber vulnerabilities, how many phishing attacks. You know, some companies do simulation and see how many times the users have compromised. Then board should ensure effectiveness by doing internal audit or getting external party to audit. And in your corporate governance code, go to schedule law, and there is a checklist of things board should do. I am sure this is a new area you haven't previously probably not looked at. And finally, in the annual report also, they have to disclose how this is managed. Go to your code, page 42 to 43. All right. So far so good. Now, page 10 and 11. Now, what is very important before I talk, when it comes to exam, is all about your confidence, your ability to write. But if you don't have confidence, මේක හරිද වැරදිද මේ පොත බලනවා answers කියවනවා compare කරනවා, right? That's not the way. Be absolutely confident. Number one for any exam success is confidence. How it will come? Can somebody give you වෙන පුතා confidence? No. It comes with your work, smart studies, right? Not to waste time, but to know what is more powerful. That's how we started this lecture. Think like an examiner. Okay? Right. So ESG. So there are many information. Sustainability initiatives. They want to optimize transport routes to minimize their emission, reduce carbon footprint. They want to reduce their scope 1. What is scope 1? What you burn is scope 1 emission. Scope 2 is what you purchase. Scope 3 is the emission across the value chain from upstream to downstream. Emission is what? The types of emission. When you are driving, say your vehicle has not only carbon dioxide, methane and other, there are about seven types of emission. The GHG emission, which is what is going to do. Remember, we will not have a planet to live. The biggest risk that can happen is what? The temperature rises, say above 2. 1.5 is the Paris Agreement. If it goes above 2, 3, can we survive here? No. That is why climate risk IFRS S2, we should together mitigate climate risk by accounting for carbon. That's why future demand comes for carbon accountants. Not carbon account is a very complicated subject you need to learn. There is a standard, maybe 200 pages, another standard 300 pages and so on. What is the standard? Greenhouse gas corporate accounting standard. You can Google now, right? Greenhouse gas GHG protocol. Please Google and check. Corporate accounting standard. That standard also talks about words like financial control, equity method, how to account your consolidated emission. So I'm not going to confuse you. Examiner, don't worry. Basic questions only will be tested, but I want to just inspire you. This is a future body of knowledge for accountants beyond numbers, right? Because we need to sustain, we need to protect the planet for us and for our future, right? That's where this subject is very, very interesting, right? So the green, they do a lot of green things, reduce their emission. Now you understand what they talk about it. So it means, it should mean all of this. And IFRS S2, this is very tough because it's your emission you can calculate. Now how can I calculate my suppliers? Somebody supplying some raw material to me, right? So I have to capture their emission and my customer's emission. Now if you look at the freight forwarder, they use their own fleet and others. Now if a vessel is going, now capture that until it goes to the end, the entire value chain emission you have to calculate, right? So I have given you 12 questions. One question is about this emission, right? Then there is somewhere here also they say energy efficient vehicle further support the reducing carbon emission and operational cost. Additionally, they have a strategic partnership with carriers, logistic. Now that is for scope 3. You see their partnership with others probably to reduce emissions, flexible distribution, right? And now if you look at sea freight and air freight emission. Now when somebody is taking a flight and go somewhere, imagine the amount of emission released to the atmosphere. It's about 40 times sea versus air if you compare, right? So emission. Then warehouse management. Now this is about the company I highlighted from this, the ESG related topics, and here also they talk about environmental and social responsibility. They say sustainability is a core focus right? The company actively works to reduce its environmental footprint. That's about emission, implementing green logistics, optimizing transports to reduce fuel consumption. Why fuel? Because it releases emission. And investing in renewable energy. Why you invest in renewable energy? Probably they want to be, remember these words, net zero, right? So while you are burning, right, you are also generating renewable energy. So you balance and show, you know, this is how I am going to be carbon neutral or net zero, right? Company emphasizes social responsibility, all of that. So there is, bottom line is this page has information about sustainability. Now, so we have, so far what I did, I actually started this lecture by giving you the confidence. The confidence comes when you think like an examiner, and then I said what you need to study is the learning outcome, knowledge behind learning outcome, make sure you are equipped, then get past papers and do. And this pre-scene also we looked at various paragraphs and we interpreted in a way how it connects to certain learning outcomes, right? So now I have given you about 12 questions, and I with cyber question is 13 questions. Especially I want to spend little time on the sustainability as well. So let me run through these questions with you now. And those who have answered the question and attempted to answer, you are very good, right? You have attempted and you think that you can answer these questions. So these questions, if you take, there is a similarity of this question. Now we don't need to write all the answers, because some questions there may be repetition, but they are similar in some form. Some questions are not similar. Now so look at, evaluate the effectiveness of the board in terms of discharging prime board responsibility. If there is a question like this, what are the prime board responsibilities? Right? Now this type of questions you can easily answer from corporate governance code. Because the corporate governance code, if you go to the first 2 pages, it talks about the board primary responsibilities to ensure entrepreneurial leadership, and then within a framework of prudent and effective risk management and control to achieve company's objective. Among other things, they need to talk about the strategy formulation, management succession, right, and then make sure that they do this ESG integration, performance management, looking at the performance, complying with the laws and regulations. There is a long list. So those are the main board responsibilities. That type of question you can easily answer, and it looks like this company, you know, is doing those basic tasks. But if you are given a question like this, I have already covered this, how they have balanced the performance and conformance role. I explained to you this performance and conformance role in terms of 4 board responsibility. What are the 4? Strategy formulation, policy making, right? So this is very much to do with the performance. Conformance point of view, monitoring and accountability, annual report, check-in, you know, all of this here. So that's why it's a conformance, is a performance. Now what do you think if you apply this company? Probably you can say they haven't performed well. That is partly due to external, partly due to internal failures also, right? So you can comment on, while now also in the current case study says they are revisiting their strategic direction also. So then you can actually criticize. Some areas you can favorably say, some areas you can comment on how board has done this performance and conformance. Can you give me specific example where they have not done their conformance role properly? Very easy. Accounts are out. There are frauds or unauthorized transactions happening. Cyber risk, they have failed. Now that part is, you know, management has failed. The board has failed to do their monitoring part. And performance perspective also, there may be some strategies are not working, right? They have to revisit them. Likewise, you should be able to build your answer. Then when it comes to the, unfortunately we don't have a lot of information, right? We have only few paragraph examiner is giving us, but we are using that, the information we are changing to suit the questions, right? Now when this question comes, integrity of financial, because this is specifically there in LO 4432, I put it in red color because that's very important. Now we can say this board has failed actually, some of the board committees, to ensure integrity of financial reporting. We already discussed that, why they have failed, right? The audit committee, we can't say it's effective because those are prime responsibility of audit committee. We also made some recommendation to improve. I discussed those points with you. Evaluate the role of audit committee in strengthening the control. Now, audit committee and control environment, what are you going to say? Now, in this case study, the way control environment is given, some areas seems to be good, some areas we have to revisit, right? But remember, when you talk about audit committee or this, don't forget to comment on fraud risk assessment, which is very, very important. This company has to actively work on that. And this interaction between external and audit committee is very important. Now, if you look at this company, they have given in the case study that external audit is going to give a management letter. This is a very traditional thing. We know this management letter. But my question to you, in the unseen information, if they say external auditor is going to qualify the set of financial statement, then what is that conversation with the external auditor and audit committee, right? So before such a qualification comes, external auditor has to communicate. That's where the early communication matters, the interaction matters, right? So they are, from that perspective, this LO is important, and this has been tested in one of the latest papers. So if examiner asks this question, you need to talk about few things, how throughout the audit, external auditor and the audit committee should meet at early stage to discuss, to make sure auditors are independent, number one, and there are no scope limitation, they have information. Number three, if there are risks, like modifications, right? Modification means what? Qualifications, right? Or if there are key audit matters, right? So those things you need to discuss early with the audit committee. So then this information, what I highlighted here helps, and we already discussed most of these questions. Now, this is very important when it comes to ESG. Remember, one of the questions I have given to you is to reconcile. Please check the questions. I think it was sent to WhatsApp group. The 12 questions I have given, there is one question: how do you reconcile corporate governance code requirement versus IFRS or SLFRS S1 when it comes to sustainability or ESG, right? So let me show that straight away to you. That's I made interesting questions for you like this, because sustainability is such a new subject. And see, this is the question I made for you. Read it now. So maybe this is our last segment. These are the questions I have given to you. Non-financial reporting. Now read. At the recent board meeting, Chairman emphasizes the power of sustainability reporting in positioning the company as a leader in sustainability, right? He further mentioned that ESG should not be pursued from a compliance perspective. Instead, it should be viewed as a strategic enabler. Uday, who is Uday? Uday is the FD. Uday agreed with Chairman and Chairman's comments, and stated that as a top 100 company, I am assuming this is a top 100 company, right? In terms of market cap, company should adopt SLFRS from 2025 with an emphasis on climate first approach. Now, what is climate first? Please write. That is one of the questions which must know. Climate first approach means what? Uday mentioned that this will not be a major challenge because of the proportionality principle and transitional provision. Now, what is proportionality principle? Please write. What is transitional relief? And those are very, very basic. If you examine us, these are the hot questions to ask. Very simple, but very fundamental. Proportionality and transitional, very simple. Proportionality means one size doesn't fit for all. Proportionality principle allows companies to what? Use, without spending much money, use available data and produce, right? I'll explain more specifically, but simple meaning is that. So it doesn't, because IFRS S1 and S2, if you really do, it says you have to do climate resilience assessment, do scenario planning, you predict what is going to happen in future and quantify, you know, if there is a climate change or say flood, or you remember, look at the newspapers, this is interesting. Newspaper has quantified last month, we are in December, right? Yeah, November, beginning of this month, you remember the sudden kind of weather change and how the agriculture devastated, right? The situation that the farmers face, that is what IFRS says. Outside in perspective, if you are running agriculture business, the climate is impacting you. Outside in, it's going to affect three things. Your cash flow, right? You are not having money now. Your cash flow, imagine this is going to be prolonged, cash flow is affected, and now you can't, because you are making losses, you can't take loan, you are struggling, access to finance, and then cost of capital. Now these are called SRRO. What is SRRO? Sustainability related risk and opportunities. So the climate risk is one such big risk, right? So climate risk has two things, please write. One is a transitional risk, that I said we have a target to reach net zero as a globe. How do we make sure temperature will not rise above 1.5? So we are transitioning to a green economy. In doing that, you are replacing your lights with motion sensors. You are changing all your traditional boilers and installing new machine that's going to impair my existing assets. So those technology change, all of that change that happens, right? So that is transitional risk. Physical risk is what I explained to you, this flood and it can be any environmental disaster. In Spain, I did in my previous lecture, so it was interesting when my first slide was, look here, this is Spain. 1 day rain equal to 1 year rain, flooded, and how it destroyed everything. Now this is what? Climate risk. So climate first approach is to first, out of SRRO, you only report climate risk. That is S2 standard. In future there is S3 and S4. Now you understand that proportionality, transitional provision, and then further he says this is not a big deal because we are using integrated thinking principle and GRI standard. Remember, GRI focus is not how external environment is going to affect, not only that, GRI, European standard called ESRS, they are also thinking how about your own impact on the environment. If you are releasing wastewater, or if you are not cleaning, if you are destroying in a manner that pollute the environment, that is called what? Inside out. The impact you create, please write this word, impact materiality. So the focus on GRI is to look at how stakeholders are affected, impact materiality. Whereas IFRS focus is financial materiality. Is it going to affect three things? Like I said, cash flow, right? Access to capital and cost of access to finance and cost of capital. If anything is going to hit your financials, IFRS, that's investor focus, right? Stakeholder focus, investor focus, right? So you can draw stakeholder focus, GRI, and European ESRS, European Sustainability Reporting Standard. They use double materiality, both impact and financial materiality. Then investor focus is IFRS sustainability. There we look at what? Outside in, or financial materiality. You learned that also, right? Then According to Uday, the main challenge in adopting SLFRS sustainability is the governance and risk alignment, including the climate resilience and scenario planning and reporting on scope 3 emission. Now we discussed briefly, right? Nimalka, you know who is Nimalka? Nimalka is one of the non-executive director in your case study, right? I think she has a logistic background. Nimalka says, who has a particular interest on sustainability reporting contributed to discussion. Now you can understand. Sustainability in a broader sense requires both outside in. Outside in is financial materiality and inside out, right? That is impact materiality. To consider the impact of our business model on a wider stakeholder group, right? Beyond the external factors that could impact, right? And that is the focus. So that's called double materiality. When you consider both financial and impact materiality, it's double materiality, right? Now these are the questions. Now you can easily answer them, no? Using the viewpoint of both outside in and inside out to sustainability, reconcile the requirement of corporate governance code and now your corporate governance code talks about what? Go to page number. Now open, because this is open book. No, we'll look at page number. Please go to corporate governance code and go to ESG, sustainability, read page number 43. It talks about sustainability. The board should consider sustainability risk and opportunity in the company's business model. Now I will pick this principle in H21, principle H21. The company should have a process to recognize significant stakeholders and material matters. Whenever you use the word stakeholders and material matters, in GRI standard also they call material topics. What material to stakeholders, right? For example, if you are polluting the water or air, or if you are not paying to labor, those are material topics. Stakeholders are impacted. So the focus in your book is what? It's broader, not only investor. That is why when it comes to corporate governance, it's like double materiality, right? You are looking the stakeholders. Now today's corporate governance is not only shareholder, stakeholder focus, right? So my answer that I am expecting, now these are in my view advanced questions, right? This type, but again for the knowledge, if you can understand at that level, simple questions are simple anyway, right? So when I say corporate governance code, please first of all you must know it is in your book, page number 43, please read it. And in the listing rule also there is a new policy on ESG, please understand that. But SLFRS sustainability talks about what? Financial materiality, investor focus, whereas your corporate governance code, broader ESG focus, stakeholder and impact materiality, right? That's the whole idea, right? So then when IFRS comes, which means those companies, if they are doing GRI standard, they are already addressing stakeholder concerns. With IFRS coming in, they have to now identify what is the word SRRO, sustainability related risk and opportunities. What are they? Right? Any outside in thing like climate risk, that's going to affect three things, right? What are the three? Those three you can give one word, please, right? One word is called financial prospects, your cash flows, right? Access to finance, cost of capital. So that's very, very important. Then, what should board of directors do regarding sustainability related risk and opportunities, SRRO? If you go to IFRS S1 standard, board has to do 6 things. Those are called house of the board. How, H-O-W, how. How? First question, which is tough for the board, that's why board will recruit you, right? Why? First thing is board should be knowledgeable about sustainability, board of directors. Whether board is knowledgeable, if they don't have the knowledge, how are they going to learn it? Knowledge. Then at board meeting, are they looking the emission scope 1, 2, 3? Or are they looking how, for example, as a result of weather, now look at, because of the weather, right, the vessel can get delayed. So that will operationally affect this company. Have they quantified that value? right? So then that is about IFRS sustainability. You are quantifying the financial impact, short term, medium term, long term of sustainability related risk and opportunities. So the second thing are whether board is looking at this information, how this information come into the boardroom, are they discussing those information, and whether their targets, the bonus, whatever they are going to get, is it connected to emission reduction, for example. So those are the matters. I'll show you those 6 points also. That is this question. Your answer should include recommendation on which board oversight committee should oversee. Now, if that question is asked, we know risk committee for risk, audit committee for that matter, sustainability for which committee? The smart answer you can give, right? So the sustainability related matters, if it is related to risk, it can go to risk committee. If it results in a violation, because there are a lot of laws and regulation comes in, so that part, some part can go to audit committee, or it can go to a dedicated sustainability committee. Most Sri Lankan companies now, they have dedicated committees. I mean, not every company, those companies who are really embracing sustainability, right? Or entire board can be held responsible. So those are the answers. In relation to the comment by Finance Direct, explain how proportionality concept and transitional relief. So these two I will explain, already explained, but I'll go to my slide and explain. Climate first, I told you, that is only to report the emission, right, or the not only emission, climate risk. So climate risk, there are two, I told you, transitional risk and physical risk, and greenhouse gas emission, explaining the meaning of scope 1, 2, 3. Then this is the most, now forget sustainability, for me the most important question from this case study for your exam is this question. Consider the current challenges faced by the company and evaluate how significant business risk. First of all, can you write 3 business risks from this case study? The industry downturn, like I said, the freight rate globally has come down, the merchandise, the overall business come down, and how these external factors impacted them, right? So that's a business risk, no? So what can you do? You can do something, right? Are you going to diversify or do what, right? So can you aggressively manage your internal cost, right? And then cyber risk is again a business risk. I took 2 examples. Likewise, identify more business risks and connect that to financial statements, right? And don't forget the fraud risk, including fraud risk factors. Right. So, yeah, that's all. Now I want to talk some of these things that I explained to you through the slides. Then we can finish. Our 2 hour will finish in few minutes. And please now itself start asking questions, because at the end I will finish, right? So, this is the listing rule, as I told you. Be aware about the listing rule also for the exam, right? Because something new in the listing rule is this fitness and proprietary. You know, you have to be fit to be a director, the age, and ethical person, right? And these are some policies, right? Chairperson of the board shall not be the chairperson of the board committees. Very, very important provisions. There should be separate policies, including policy on ESG, right? A requirement on chairperson and CEO duality, if the CEO and chair are the same. Then your senior independent directors, some specific requirement. They are in the corporate governance code. And this is the paragraph we looked at about the ESG in the corporate governance code. This I covered now. Outside in, you can see from the pictures. No, imagine this company needs water, now no water, no? So their cash flow is affected. Similarly, this company is releasing wastewater, right? So impact materiality, financial materiality we discussed. Financial materiality is going to erode your value creation. Here we can't run the business. Impact materiality is the impact on the environment and people. And so this is very, very important to understand. The whole focus of sustainability is to disclose one thing, what is called sustainability related financial information. What does that mean? It means SRRO right? That could affect cash flow, access to finance, cost of capital. If you want one word, that word is financial prospects. That's all simple, huh? Right? Simple theoretically. And then, yeah, these are basic stuff. The other thing I want to show, this is the role of the governing body. I said 5 house. How? කොහොමද කරන්නේ? How the responsible, now first of all, whether sustainability related responsibility, governance, you know, this about the governance process, controls. Now this emission calculation also, like you need to have internal control, how it is computed. It's not very easy, emission, you calculate energy in gigajoule and then look at the emission factor. You imagine now how this calculation is very technical, right? The global warming factor you have to take and convert everything to carbon and report it, right? So then how this responsibility, at least whether board has looked at it, right? How the responsibility is for sustainability, is it connected to any of the current committees, right? Mandate. So this is where I said, is it which committee? Is it audit committee, risk committee, entire board? And then, like I said, how board is going to acquire skill and competence? Is it available? If it is not, how are they going to develop? And how board is going to be informed about sustainability related risk and opportunities? And then how they are considering this when they monitor the business? And finally, how they oversee this target. So how it is connected to board remuneration. Those points I explained to you. This is in governance. Like I said, if examiner wants to test, it's only basic thing can be tested. Climate risks, right? When we talk about climate risk, remember I told you transition risk. What is transition risk? We are going to transition from now to a green economy. What is a green economy? Where we need to reduce emission, make sure that the emission reduction, the temperature will not increase above 1.5, so that we have to reduce our emission, right? So there is a target set, you know, some companies are setting we are going to be net zero by 2030, like that. There is a global target. You have seen sustainable development goal, SDG. There is one thing called climate action, is all about energy reduction, billions of trillions of money, you know, money allocated to do this agenda. So when you go to such a new economy, I'll give you an example. In Sri Lanka, carbon tax is not there. Now one of the big risks is these taxes. Now some of the, if you look at Haley's annual report, when they send the rubber, you know, some certain things to Europe, now that they have to give product costing, those taxation, and then especially for rubber, deforestation rules are applicable. Now already this transition risk has led to lot of regulatory policy and legal risks. Sometimes when you change the technology, you have to impair your assets. And then new market is created for sustainable products. That's the positive. Remember, it's not only risk but opportunity. Right? Then physical risk is flood, right? Or hood. So it can be acute, suddenly it hits, event driven, sudden event happen. Chronic means long term change in the weather pattern. I told you Spain, 1 year rain in 1 day, right? Maybe a chronic change. So why this is important? Because it's going to affect your financials. So that's all. Physical risk, as I told you, acute physical risk means weather related events such as storm, flood, drought, heat waves, which are having a severe impact. Chronic means long term shift in the climate pattern. So that you need to know. And then other thing, last thing is about greenhouse. See the scope 1, 2, 3. So I told you simply scope 1 is what you burn, right? Now see this diagram is very, very clear. Scope 1, direct emission, see company's own vehicles you are using, right? Whatever you are doing in the company, your generators burn, right? And you purchase from CEB, that's your indirect emissions. Scope 3 is very tough because that's your supply chain, right? Whatever your raw material purchases, right? Employees are coming to work and you know, managers and CEOs are going overseas in plane, right? Air travel. So all of these things, there are 15 categories under scope 3. So you need to calculate based on the relevance and report. So the last thing, right? Last thing is, last thing that you should know about proportionality and transition. This is something you must know. අනික කියව මම ඔයාලා must know කිව්වේ නෑ. මේ ඔක්කොම දේවල් අදාළ නැත, right? Understanding very simple concepts in S1. For example, you must know what is SRR or what is climate first. You know what is, maybe you must know what is emission, but board of directors responsibility, those things you must know. But proportionality means, this is very simple. Proportionality principle means this. This is proportionality. What is proportionality? These two columns, right? Because some companies are very smaller, you don't need to do complex things. Do what you can do is proportionality. If you read this, information use limited to what is reasonable and supportable. If examiners, this is what you should know: reasonable and supportable and available without undue cost, right? And if you cannot quantify, use qualitative information based on the skill and capabilities that you have. Now take example, I told you climate related scenario analysis means now you have to predict this is the scenario in Sri Lanka in another 3 years time, therefore I am going to lose X amount of money. Can you do that sophisticated, model, financial modeling? Huh? No, if you can't do that scenario analysis, do what you can do. What you can do, you can Google now. There are some publicly available scenarios. Those are called IPCC scenario. IPCC is one body publishing, certain scenarios that will happen in 2030 or 2020, and based on that you will see how your company is affected, right? Because you don't have money to do sophisticated calculation. And then you don't need to calculate, quantify, write a paragraph about it. That is proportionality principle. But if you have money, use a model, buy a software, right? Do it accurately and give the value, dollar value or rupee value. Now did you understand? Proportionality is so simple. Then what is transitional provision is the relief given. Now this tough thing, for example, scope 3 emission, how to calculate is very tough. How can you calculate your supplier's emission? Right, imagine if you are a clothing company, you are selling the end consumer, how many times the end consumer washes the denim, and after that denim is going to be destroyed. That emission can you calculate? Yeah, it is also part of scope 3, right? But the standard says you are given a relief, at least in Sri Lanka now, 2 years to report scope 3, like that relief given. There are many areas relief given, and that I have added in the last slide. Transitional reason, especially top 100 company, this standard is applicable from 2025 to 2030, 5 years. And then relief specially given especially see this one, entity shall, this is one big area. And I told you this corporate greenhouse, remember this, normally the recommended standard for greenhouse gas is this standard, Greenhouse Gas Protocol Corporate Accounting Standard. But if you are using some other thing, that is also permitted for the first year, right? That is a one relief given. Secondly, very tough thing called scope 3, you can take 2 years to do, right? Only scope 1 and 2 you can do. First you report your emission and then take another 2 years. Now this is example for transitional relief, that's all. It's 5:55, last 5 minutes. Now you can ask questions. Do you have questions? I told you, ask questions early, I will just stop, right? So ask. So I hope you remember this. You remember this, right? So if there are questions, please send. And I hope this session was very useful to you. Yes or no? Did I make exaggeration at the start? This will be very good. Look at the end. So at the end, did you feel that this is helping you? This is giving kind of directions and confidence to go back and really have a very strategic approach to prepare by looking at the low essential reading that you need to do, and then having the confidence, sitting and writing your own answers, and then becoming the prize winner or scoring about 60, 70. Right, thank you very much for your comments. I'm sure some of you are already commenting that the session was useful, and I know that. And also remember, what we discuss is beyond the examination and this knowledge. This is a very rich subject, and I'm sure first thing your target is to be a chartered accountant, and beyond that, whatever you learn is not just theory. Go to the corporate world and be innovative, creative, and be stand out even beyond a chartered accountant, and I wish you all the best. Thank you.